Today we will discuss basically about trading and investing, the basic idea behind trading and investing, their advantages, their disadvantages, and how we can figure out that what will be more suitable for us, what kind of trading style will be suitable for us. So it happened with one of my very close friend. So he wanted to make some money, and his broker told him that you can make more money if you do intraday because the brokerage is very less. So what he did, he bought a huge quantity of one shares in one day, and he thought that at the end of the day, he will sell those shares when the price will go up, and then he will make very quick money. But what happened? The price of that particular share actually gone down on that day. His trader, he started becoming an short-term investor. So he thought, let me wait for a few more days, but stock price did not appreciate and he was in even more bigger loss. Then he thought that let me become a medium-term investor. Medium-term investor, so that basically means he wanted to wait for a few weeks for the stock's price to come up, and maybe a month. But he waited for a month, and then also stock price did not come up. So psychologically, we do not want to lose, right? Our parents always taught us you should be winning. Now, when we book loss, it is a failure feeling for us, and we wanted to avoid it. And we thought that, okay, let us wait. And many times it did not work out. And in some cases, we are actually in the deeper trouble. Now, what we discussed, that also tells what is basically meaning of trading and what is investing. So trading and investing, these two are two different things, and both has its advantages and disadvantages. Like what? Now, when we do trading, that basically means we frequently enter into particular stocks and exit, maybe booking some profits or some cases booking some losses. The advantages is as we are doing this over and over again, then we can roll over our money quite frequently. Right, we can roll over our money quite frequently, and we can make more trades with the same number of capital. But if we just carry this for a period of time and we are not really exiting, then our capital will be limited. So that becomes more like an investment. It can go for 1 month to 6 months, 1 year, or few years. Now, what are the disadvantages of trading? One of the biggest disadvantages of trading is as we enter and exit a few times in a week or in a day, then it also increases our cost. Like we have to pay more brokerages and also other charges. Like there are 7 other charges that we need to pay to the exchange and those regulators. And another biggest disadvantage of we are subjected to intraday volatility. Like say, as for example, the medium-term trend or the trend of the stock might be up. So our decision to buy might be right. The problem is during the intraday volatility, it just come down and it can hit stop loss, or we might, out of fear, we can exit that particular. So that is the disadvantages. So the entry point, at what particular price or what particular point in a chart we will enter, that is very important for trading. Now, in investment, the advantages of investment is as we are entering and exiting only few times. So in that case, our cost of the trading, like brokerages and other charges, will be limited because we are not entering, exiting too much of time. And also, it will not be affected by intraday volatility. So if the stock comes down or it goes up suddenly, we are not going to be affected too much because the long-term trend, if intact, we will be getting benefited. So these are the advantages of the investment. But the disadvantage is if our capital, everyone's capital is limited, right? In some cases, few people has a few lakhs, few people has say in a few crores, but whatever it is limited. So once we invest, unless we get out of the stock, book profit or book loss, we cannot enter to other stocks. So the number of cycles we can make will be limited in case of investment. Now, question is what we will be doing. So see, there is no hard and fast rule. First of all, we need to understand, we need to realize that what kind of trading style will be suitable for our personality, number one. And number two is what will be suitable for our everyday lifestyle. Like if I have a say full-time job, like from 11 o'clock to say 6 o'clock, then I cannot do intraday trading or the investment. So in some cases, maybe somebody will be wanted to do some intraday trading, like say from morning 9:30 or 9:15 to say 11 o'clock, and after that, that person is going to office. But this time will not be sufficient for that person to make consistent money, and many times we will be susceptible to intraday volatility, and it can incur a huge loss. And moreover, all of beyond all of these, the important point is what kind of skill set we have developed. That is important. We need to understand, and then we need to trade accordingly. That will increase the odds of success for becoming a trader or investor. One thumb rule is the lower the time frame, we will be having more difficulty in execution, and we need to be more skillful for entering and exit. What I wanted to mean is, say as for example, we enter into a stock and we thought that we will keep it for a medium term, and we are like an investor. So this will not be affected by intraday volatility. And overall trend, if it is in my favor, then we will be able to make money. But in case of short-term trading, or also in case of say intraday trading, our entry and exit should be perfect, and we have to have a lot of patience, and we to know what point I will be exiting, what point I will be booking profits. And in cases I need to book a loss, I should not be bothered much to book loss, right? So in that way, we should be able to gain consistent profit. And the thumb rule is lower the time frame of our trading. It is going to be more difficult because we will not get time to decide. It has to come to our blood, and we should be able to make the prompt decision at any point of time, and that is how we should go and execute our trades. So that is the overall of intraday trading, or say the trading and investing. Now, all trading does not mean intraday trading. The trading also means some trades can go for a few days to few weeks, and even it can go for a month or a half month. So that is also part of the trading. Now, once we enter into this domain, and we have to first decide that, okay, I want to become a trader, or I want to become an investor. I want to do it with myself, or I want to take help from somebody, and I can just take some guidance and grow my money. So these are all big factors. And normally what happens is I know most of the rules of the cricket, as for example, but if I start playing, probably I'll not be able to perform in all kinds of platforms. So that is the important part. Now, the stock market is a place where not only the Indian people, even the all over world, that's all big investors, all big traders, all very skillful traders, everybody is there. And moreover, now in today's world, there are a lot of machines are working. So say around 40 to 50% are machine driven. Now, when we try to compete with them, we have to be super, efficient, or we should be able to find out a region where I am comfortable with and I have the skill set. So that is the important part. On the bad name that trading or investing or the share market have, this most of the people lose money. So it is going to happen because see, it does not require any qualification to enter into the stock market. Say if I am going for a job, say I am applying for a banking job. So bankers will see what is my qualification is, whether I have a finance degree and I have adequate qualifications, then I can go for a banking job. But say the same person, if he's trying to stock market, is anybody is going to ask him that what kind of qualification skill sets that person is having? No, absolutely not. Without any skill sets also, that person can perform, I mean, that can take trades. So now without any skill sets, when we are starting to compete with the best of the best in the world, we know what is going to happen. And that is why the most of the people lose in the stock market. So it is not on the instrument which is in faulty, it is how we react to that particular environment, and whether we are manage that situation when it is stressful. That is about the basics of trading and investing. In trading also there are different ways to trade, and investing also there can be different ways to trade, ways to invest. Now and those things can be clubbed together also. So the few people like that whatever income we generate from the trading, we invest, and that is how we keep on investing. And so all investment might not come from our pocket, it might come from the profit also. And it is possible to make our investment free over a period of say few years, like if we continue to do it. And even we are not able to do it exactly like that, even some investment can be clubbed with the trading, and it can give us a better hedge or edge over the others. So these are just very small things, but very important things, and it requires time, energy, and and the willingness to learn to master all these arts, and that is the key to success in this. I don't know what kind of personality you have and what kind of person are you, and what kind of lifestyle or the daily activities everyone is having. But it is very important that our trading style should suit our everyday activities and also our skill set. What kind of trading is I am more comfortable with. Based on that, so it is like any other activities or any other job. So if we think that if I want to become a cricketer or footballer, I need to take a coach. If we don't take a coach, maybe it can still happen, but it will take very long period of time, and that time might not be suitable for people to keep invested in that stock market or share market or any other area. These are very generic rule, but most of the cases we don't follow, and we basically not able to give time to get those expertise. It is understandable, right? If we have a job, also we need to study for our job, and also we need to work for that company and learn new things to keep up with that requirement. Now it is very difficult to gain expertise in another areas, and where there is no schools or colleges. People who join me, they were telling that see, in the office, if we don't know anything, I can ask my seniors and they will help us. But in the stock market, there is none, right? When our loss happened, it happened, and we just do whatever we think that should be suitable for us. And in that case, it is also wise that we don't take too much of risk. And in case we are not comfortable, it is better to stay away. At least we will not be losing money. But this is also an area where there is a lot of possibilities are there, right? And we can really make it big if we continuously attempt. These are the basics of stock market and trading and investing. And first, one person has to understand what kind of trading style or the investment style will be suitable for that person, and accordingly we have to make a plan, and then we can go through that particular journey. And so it is like a skill set development, like any other areas of our daily life activities or skill sets. So once we are able to get it, then it will start giving those benefits, and it can be really without any limit. Is there any questions, queries, or any doubt, or any kind of clarifications you can? Okay, so I'll just share my screen. We will just go through the few basic things, that the bare minimum thing we need to do even for trading or investment. So say this is one part which is called like a chart reading. Now let's see this current market condition. If we see, so we go to the index first to check how our index is doing with respect to historical data. So now we are in the Nifty. So Nifty is a index which has been formed with the 50 stocks which are the biggest in India, and accordingly they have been formed. So this is the Nifty chart, and so if we see the chart for say the monthly chart, we see this stock market is actually gone up quite significantly, and after that still it is on the upside only, but after that there are some sell-off happen due to different global news, the tension between the Russia and Ukraine, the mainly which is happening in recent times. And then what we do, we actually analyze with a smaller time frame first and then go to the higher time frame, or higher time frame first and also we can go to the smaller time frame. So this is like our weekly chart. Here we can see after this kind of sell-off. Sell-off means all this red, we call it the red candles. There are sell-off happened, and after that sell-off, there is a very big, huge green candle has happened. That basically indicates for this weekly time frame, after being sell-off, it is now trying to go upside, right? And this weekly candle is also like a green engulfing candle. This is the overall trend. Now that means there was a sell-off happened and now it is going up. So normally this kind of condition, we will be getting quite good stocks in a cheaper price because people has booked profit and now they are again buying. So that is one advantages we will be getting if we want to invest. Like say here also, like when Nifty was like around 15,800, then we bought a lot of good quality stocks and they were available in the cheaper price. But normally it happens in the reverse. Like all those news channels, all those started advertising and telling people now you buy and it is doing good when most of the stocks are in the top, right? And most of us or most people buy when the stocks are at the top level, and then with some correction, then we are in the loss. And normally we always get afraid when the stocks are available in the cheaper price, but normally so it is not possible to buy exactly at the bottom, but at least at the good valuation we can buy. So that is we can get from the Nifty. Now Nifty is an index. We can only trade in the Nifty in the future and option market, but we cannot buy Nifty like a cash market, right? Now, when we talk about Nifty, so here, these are there are total 50 stocks under Nifty, and they are like a blue chip stocks, and they will be mostly be large cap stocks. Now, if we want to see that is okay, I want to do some investment and what stocks I can buy at this particular moment, then what we normally do in that case, we go to the individual stocks and then we see those charts. So we see the charts in the little higher time frames. So as for example, in the weekly time frame. So here in the Adani Ports, the different, this is the Axis Bank chart, say as for example. So now if we take that example of the Axis Bank, see the Axis Bank is a good performer, good performing stocks, and see what happened for this. This is the Axis Bank. So this is the COVID crash where it actually fell around 307, and then it from the 307 it gone to high around 859, and from there was some correction and the stock has come down to the lower side was 638. Now many people has bought around this price because this is the zone which we have drawn. This is like our demand zone, and mostly in this area there will be a lot of buying will happen. Just how it also matched here, like we have drawn this when the stock this has made this particular areas, and now there was already one bounce has happened from here, and then it has again gone up, and then again it came down due to this bad news. So many people has bought at this particular areas, and if we are able to track those areas, even being without becoming a trader or active trading, we can make a very wise decision even for the investment, and also it can help in the trading. So basically the objective is if we are able to buy a very quality stocks in a cheaper price. Now, when any bad news comes, normally people try to get out. So always when people get out, they make a bigger candles. Like always, you see in this, even in this chart, this is the Asian pens. So here we see the more bigger red candles than the green candles, right? So the reason being always the sale happens faster than buying. The reason being for selling, you do not need to invest money. Whatever we have, we just put a button and it will be sold off. So that is why always sale happens faster than buying in most of the case. Now, any particular stocks, if we regularly monitor and if we know that we can really buy these particular stocks at a good valuation when due to some reason it has come down, then it will be a very good value addition for our particular investment. Say as for example, this is a Bajaj Auto stocks, right? And this is the similar demand zone we have drawn. What happened? It was actually good stocks and there was a lot of sell-off happened and then it gone up. But see, stocks has come to this particular zone, and from there only it has gone up. Like just imagine if you are able to buy these stocks around this price, and you knew that there is a more chances, more probability the stock will gain more appreciation when it will come to this particular zone. So if somebody is able to buy the stocks around 3100, so it is already 3400, so 300 rupees, like a 10% gain in only matter of 1 week, which is actually a quite decent. The important point is we need to keep our track if we want to invest by ourselves and really make good money over a period of time. So this is another example, and this is for BPCL. So for a very long time, we have this plan. That is, if this stocks comes to this particular green zone, then only we will buy. Normally, most of the people or retailers buy when all stocks are doing good. Like you must have noted in the social media that many people has bought IRCTC or all those stocks which are already on the top. Then people jump on it, and then big people, take their profit. But this kind of strategy, which normally very professional people they follow, like see here also it happened, right? We only bought in this zone and it has not come down. So even stocks come down much below, it does not mean that will be a good candidate for buying. Come to that particular zone, but in some cases it might not be able to hold. So in this case, say this is a Britannia. In this case, we also drawn these zones, and even in some cases, it also worked, right? So there was a sell-off, but from this level, it actually gone up quite significantly. And the next time there was a more sell-off. So in this case, it did not hold. So of course, when it will cross this zone, we will probably not buy or add up our position unless there is another zone below where there are more chances that it can appreciate fast. So similarly, all the stocks, and in some cases we might not get filled, like here in Cipla, you can see it here. In Cipla, we decided that we will only buy these stocks when it comes below 815. It has not come at 815, so we did not get it. We are okay with it. If someday it comes, then only we will enter. So that is how we mostly trade, and we do not buy at their valuation just to increase our cost. So as for example, this is the Coal India. Now I just drawn this demand zone. Now how we drawn this demand zone, that is another areas that we discuss in our mentoring program. Just imagine this particular stocks, it is actually a good performing asset, and it has come very near to this zone, and then only it has gone up. So from the very beginning, if you are able to anticipate that this is the price, from this price only the stock can appreciate, then so at least the 70-75% of cases will be making a very good investment. So 30% cases might be we might be wrong, but that should be absolutely okay. It is not possible to make the 100% times it is correct, but most of the times, say, even we will be correct. Just imagine how even this worked. So if somebody is knowing that this is the good price to enter into these stocks, just within a matter of say 2 weeks, there will be a huge appreciation, and it is about say 10%. There are the different kind of trading styles and strategies. Now, we first need to understand that what kind of trading style will be suitable for us, mostly in terms of our daily activities. So if we have a job, of course, will not be suitable to do intraday trading, but there will be other areas of trading, even with the job we can do without opening our terminal on a daily basis.